Today we'll be talking about investing and why it's so important. I think that most people intuitively understand that, hey, investing is a good thing and it can be a great tool to unlock long-term wealth. However, often we don't take that step back and think about investing. What are the mechanics and components to it, and why is it such a significant opportunity? And so in life, breaking it down into two core buckets, there's two different ways that we can make money. First and foremost, there is earning an income. This is where we exchange our time for money. The most obvious example of that is with a salary, but of course there are a lot of different compositions of how this could look. And then on the other side as well, this is when we invest in assets and seek to make a return over time and seeing the growth in value over time from this return in assets. And this is investing. Investing is defined as generating return from an invested asset. And there are a few reasons why investing is considered so important. First and foremost, it provides that pathway to develop longer-term wealth via good habits, as well as the opportunities from compounding, which we'll talk about later in the video. But along with that, a more pertinent discussion as well, particularly in recent times, is surrounding inflation, because inflation reduces our purchasing power, and particularly with record low interest rates, savings in the bank are even more at risk. There's an interesting quote that goes by Robert G. Allen and states, "How many millionaires do you know who have become wealthy by investing in savings accounts? I rest my case." Now, of course, this might be a little bit of hyperbole, but it is quite a fascinating discussion. It really builds on top of another quote that says that you can't save your way to wealth. And so ultimately, with that contextual backdrop, investing is a tool that people use to achieve their financial goals. Whatever they are, every individual, every household is going to have different financial goals, different metrics that they want to try to achieve, and different things that they want to do if they are successful. And so it's worth noting that investing is the tool, but of course, everybody has a different way to deploy and utilize that. And so investing is putting your money to work, particularly over a longer term time horizon, and building longer term wealth through that way. There's a range of different ways that we can earn income from investing into assets, whether it's through capital gains as the value of our asset grows. Of course, an example of this would be if you buy a stock, for example, for $100 and it goes up to $110, you've made a 10% capital gain. Of course, whether that's been realized or not is another discussion. You can earn income through dividends or bonds or through rental properties, or a liquidity event, which might look like the sale of a business or another capital transaction. But investing also helps to open up compounding. If you are interested in compounding and what that means, we've done a deep dive video unpacking that, which you can check out above or after this one. But at its core, to really help distill it down, compound interest is interest that accrues on both the initial principal and the accumulated interest from previous periods. And compounding really leads to exponential opportunities over long periods of time. In fact, it was Albert Einstein who once coined compounding as the eighth wonder of the world. Investing can be quite a broad catch-all phrase. As we mentioned at the start, the purpose is to try and attempt to generate a return from an investing asset. However, when most people think about investing, of course, the conventional ways we think about it is through stocks or bonds or property. But there are, of course, many different asset types as broad as cryptocurrencies to Pokemon cards or vintage cars. And all of these could be considered investments, but of course, each different investment has its own risk to reward profile. However, it's not only the return that investors seek to gain. Of course, this is the primary focus, which should be first and foremost in every investor's mind. But there are often additional ancillary or intangible benefits that might come through your investing engagement. Making a return in that sustainable manner should be first and foremost. But whether it's learning or developing a new skill set or exposure to new industries and topics that maybe you haven't considered, there are additional benefits. If we're thinking about just the stock market as one of those examples, maybe you work in accounting and you want to develop and continue to improve your skills reading financial statements. Maybe you work in the IT industry and you want to stay up to date with all of the new technologies that are potentially being released around the world and looking into the startup space. Or potentially you're inclined to read about politics and economics. You love your history and you love understanding this. And looking at the broader market gives you that exposure to continue to develop and gives you that excuse to really stay up to date with everything that's playing out. So ultimately with investing, we should be strategic about our objectives. We should work out what our goals and plans are, have them written down, and understand that of course these are going to be fluid, but there are a few different components that go into them. First and foremost, how much time do we want to spend investing and also developing our knowledge and our craft? What are our financial goals in terms of returns, but also the potential end goals? Because once we have those potential end goals, we can work backwards and reverse engineer how we may need to get there. What are the areas that we best understand and we actually enjoy learning and spending time researching? Investing or engagement in whatever we do in life shouldn't be like eating our vegetables. It shouldn't be a chore. It should be something that we enjoy, that enriches our life. We only have 24 hours, so we should be making the most of it. And of course, talking about or thinking about those additional benefits that we want to achieve and seeing how we could gear our strategy or our research process to try and encourage ourselves to maximize those additional benefits too. There's that magical quote that says, "An investment in knowledge pays the best interest." I'm sure you've heard it by Benjamin Franklin. When we focus on investing in our futures, whether that be financially, health-wise, in sport, our career, or relationships with those around us, our long-term mindset will always help open up those opportunities. Thank you so much for joining us. For now, stay well and happy investing.